You've been told that the stock market game is between 9:30 and 4 Eastern Time. However, it looks like the real money is made overnight. This chart shows something that Wall Street doesn't talk about. Nearly all of the S&P 500 or the ETF SPY's gains over the last 30 years have happened not during the trading day, but overnight. And that tells me that the real action leads me to the question, what if? Welcome, my name is Rosh, the founder of SPY Tomorrow, and for several years, I have been building and testing algorithms to help answer that question. We use this dashboard to monitor the mood of the market at the end of the trading day to determine our trade direction and how aggressive we want to be in our overnight trade. Why do we trade overnight? Well, it's due to the overnight gap. You know, you've seen it. The market closes at one point at the end of the trading day and then opens either up or down the next morning. Well, that's the overnight gap, and it's tradable. How accurate are the algorithm's metrics? Well, that honestly depends on the market. But we do list the last 20 readings and the results on the front page of SPY Tomorrow, so you can see if it's right for your trading style. Remember this chart at the very beginning? Well, there's one thing about it. It was only based off of an up open, or trading on an up open, meaning if it went down, you lost, and if it went up, you won. And over that period of time, since 1993, it was up, say, about 54% of the time. And that's why it worked. But that question of what if we could both point up or down depending on the market pressure before the market close. Like day trading, overnight swing trading is high risk, high reward trading. Day traders battle that up and down emotion. They're battling those quick maneuvering algorithms that always seem to be working against them. They're battling screen fatigue. However, with overnight swing trading, you just have one trade. You measure at the end of the trading day, and then you either point up or down. And there are a number of ways to go about that, which we'll talk about in a few moments. But there's only one thing you have to do, and then you just let the market do its thing overnight, and either you're up or down, and then you do it again the next day. Day traders may make 4, 5, 6, or 7 trades before lunch, exhausted before the day is over. We have our day open to do what we do, the work that we do and the things we enjoy, and we just make one trade at the end of the trading day and then just sleep on it. But there are other reasons to know why to know the pressure at the end of the trading day. It's also just good for planning on how you're going to attack your trading the next day if you are a day trader. There are many approaches to determine the pressure at the end of the trading day. Some people will use put to call ratios or maybe technical indicators such as the MACD or moving averages. Many ways to approach it. Now, our algorithm uses a very specific approach, a proprietary approach, and we give it away for free on the front page of SPY Tomorrow at 4 o'clock Eastern Time, and it will show you either up, down, or neutral. These algorithms have certainly evolved over time through different markets. The early algorithms were very simple mathematical calculations that grew into more complex calculations as I began to understand how the market moved and what moved the market. And also understanding the different market regimes. Positive and negative gamma is a big part, and we actually now have algorithms that are gamma aware, and actually the indicator adjusts based on the type of market we find ourselves in. And over time, our indicators have become much more accurate. Now, of course, you always have to keep an eye out for news overnight. You have to keep an eye out for maybe government reports that will be released in the morning, or maybe earnings after the bell. And of course, there's some things you just never know. A political statement, a war breaking out, economic crisis around the world that nobody was expecting. These kinds of things can happen, and that's why, especially during negative gamma markets, we like to hedge our overnight trades. And over time, I've built QQQ tomorrow, IWM tomorrow, even IBIT tomorrow, and the results of those indicators are available to SPY Tomorrow members at the end of the trading day. For the free pressure signal, head on over to spytomorrow.com at 4 o'clock Eastern Time to see if it says up, down, or neutral, and then you can decide what type of trade that you wish to make. It could be stock, it could be options, it could be ETFs, futures. Now, we generally try to stay away from approaches that could put you in a position to lose more than you put in. So we generally don't promote or teach that as part of our education, but there are many ways to apply the idea of knowing how the market might open the next morning. For many people, knowing the up or down pressure is enough, but I built this dashboard for me because these are the other things that I want to know too. I want to know, how is the market feeling? What is the fear gauge as far as the market is concerned? What is the current hurdle rate? Meaning, how far does the market need to move for me to actually make money? And if it seems to be too big of a hurdle, I may make other decisions. These are additional bits of information that help me determine the direction I want to point my trade, as well as how aggressive or conservative I wish to be in my overnight swing trade. You need to be the person who determines how much capital or risk you put into the market. But let me share some of my best practices. First of all, I recommend that you have a high risk, high reward account, something separated. Don't use your retirement or your savings fund or your travel fund. Use something that you can risk, and if you lose it, it's not going to hurt your life in any substantial way. And usually it's not more than maybe 10% of your overall portfolio, or even less. And when you're position sizing, quite often it's less than 5% of the total in that account for the overnight trade. But some of the best overnight traders tend to risk maybe 1.5%, 2% overnight. That way, when you are on a losing streak, which will happen, you'll survive that temporary setback and be able to take advantage of future opportunities. If you want to test this out, I recommend you take the 30-day challenge and paper trade over 30 days to see how you would react in different markets and to see if this style of high risk, high reward trading is right for you. And again, you don't need to pay for anything because that signal is free on the front page of SPY Tomorrow, as well as the archive in which you can review the last month or so, about 20 trades, and see what the signal was, how strong the signal was it up, down, neutral, and what was the result the next day, looking at that first half hour of the trading day, and then maybe consider how you might have reacted in that market. It's important not to judge yourself over one night. Remember, a day trader may trade 4, 5, 6, 7 times during the day when you're trading once. So 5 trades is actually an entire week. So that's why we want to give it at least 30 days to see where our skills stand, maybe take notes in a journal, and figure out what is our best approach to trade overnight. Is it options? Is it ETFs? Is it a helpful tool for planning your trades the next day? And if you decide you need earlier access to the pressure numbers before the market close, or you need additional tools to help you make your decisions in terms of how aggressive or conservative you want to be in your overnight swing trades, well, then you can consider membership. I believe the math is on your side, and the only thing left to do is start. So I'll see you at 4 o'clock Eastern Time at spytomorrow.com.